Hey guys, I'm going to do a daily market review for November 29th, Wednesday. I didn't live stream earlier today. I had to drop my girlfriend off at the airport during trading hours, and then I just decided not to even trade the afternoon because we've taken a few steps back on the account, and I just thought it'd be good to sit on the sidelines for a day, kind of clear my head. I will be doing a monthly review at the end of this week. We came out of the gate really hot in a good way. November went 5 for 5 the first week, and we've given some of that profits back the last 2 weeks. We still have a few days left in the month, but I'll be talking a lot in that monthly review about money management because our hit rate this month is still good, but our losses were bigger than our winners. So that's a money management conversation or risk management. So that'll be out at the end of this week. In terms of this market review, let's get into it. I talked about in the forecast how I thought it was going to turn into a down week, and as you can see, it's been a range. It's been a decent range, but we still have a small body. If you can see, we haven't closed the body above the consequent encroachment of this wick. So I think if we do Thursday and Friday start closing bodies above consequent encroachment, then we'll probably take out this high. But again, we are in a very, very deep premium, and I thought we could have a down week just to tap into an inefficiency on the lower end, but that hasn't happened yet. We still have 2 days left. But what gets really interesting is when we go down to the daily chart. If you look at the daily chart, we had this big wick up today that just cleared out all the buy side. And then we came back down. So honestly, what I'll be interested in tomorrow is what does our body tomorrow do? I think that'll be really indicative of next week as well. We have Jerome Powell speaking on Friday, I believe. Yeah, Powell speaks on Friday, so they could just be holding it in consolidation for when he speaks, and then they might send it lower, blow it to this discount. I think that's what I'm kind of thinking is going to happen, especially with the fact that this wick came up so high, just took liquidity, and then closed so low. That's what I'll be expecting. If we go to the 4-hour, you can see we have a lot of equal lows down here. On the 4-hour, we took buy side here, came down, took buy side here, came down, took buy side again, but we haven't taken any sell side. We have relative equal lows right here. So it seems like, especially with this aggressive rejection, if we get below this new week opening gap, we're definitely going for these equal lows. But until that happens, let's just wait. This is definitely the market where you got to really sit on your hands, and I myself should be doing a better job of that. Because now that we are in this consolidation, and I drew it from here, but you could also draw it from here. But to get a little more concise, to draw it from here, when you are in a consolidation like this, it's best to wait until you're definitely out of it before taking trades, because again, I didn't trade it this morning. Again, I was driving to the airport, my girlfriend to the airport, but I did look back, and I tried to find some people that were streaming, and a lot of people thought once we got above this high, they were like, oh, we're going for the all-time high, which is this green line. And everybody's kind of, because you expect to trade a trending market, and now that we've proven that we're not in a trending market, we have to wait, because what it's going to do is it's just going to gyrate from each side of this consolidation. So when it got above here, remember, highs and lows are part of the PD array matrix. And I just learned how to put pictures in the stream, so that's really exciting, because there's been so many times when I've wanted to have a picture go up, and I didn't know how to get it on the screen for you guys with the software, but I took some time to figure it out, and here we go. So hopefully you guys can see that. Old highs and lows are part of the PD array matrix. So remember, market price, we have, this is our range right here. We have premium and discount. This range is marking our premium and discount. So when we took this high right here, that was the deepest level of premium that you can get. Old high or old low. Old high. So we took that and then immediately rejected, and we went from the premium all the way back down to the discount. So now we are technically in a discount again. If you see from this low to this high, and again, depending on how long it wants to stay in this consolidation, it could find a PD array in this discount and send it higher again if it wanted to. I think if we do leave this, I'd want to watch and see if it treats any of these lows as a breaker. Probably go high, low, high. I'd pick this just because this had the most, as you can see, it's the most aggressive low. It's very intentional. I'm blanking on a word, so I'd probably use this candle for that breaker and target these lows. But I'd want to see us get through this new week opening gap. Anyway, so that's where we're at right now. And again, just remember, it's really got to sit on your hands. Go down to the 1 hour. Actually, what I'll do is I'll just go down to the 15 minute, and I will kind of dive in a little deeper into, what price did throughout today. Collapse. Try and clean up these charts a little bit for you. Okay, so at the open, you can see we opened at 9:30. We had this consolidation right here. Then we opened at 9:30 and ran. And all we were doing right there is sweeping again this high, because it came up, consolidated a little bit, and then aggressively broke lower. So when you're watching something like this, just understand that you either you would have had to have had a model that would have put you in long somewhere down here to be and targeted this high and this other high to be a part of this move. But once we got above this green line, which was those highs, there was no chance for an entry. I guess somebody could have technically entered that fair value gap, but again, that's a hindsight thing. I think that was probably unlikely that anyone really did that in the moment. So you probably wouldn't have been a part of this move. Consolidated. Nothing in this consolidation was really, I think, forecasting anything. If we go, maybe I'll pull it up here. If you look at ES had an SMT. So as you can see, ES made a high right here, and then it broke aggressively lower. So ES looked like it was about to continue this run up. And then NASDAQ just kind of consolidated, and then eventually broke lower. I really don't think there's anything in this. Maybe if we went to some lower sub 1 minute time frames, we could probably find something that like kind of tipped its hand on what direction it was going to go. But on the 1 minute right here, I really don't see anything that could have forecasted a next move. And then we had this aggressive drop. And again, I actually went and watched, I found some person that was live streaming ICT Concepts, and he was like they were calling both sides in the middle of this range. And it's one of those things where it's like you just have to wait. It's okay saying that we don't know what's going to happen right now because they're like, oh, it's going to go long. And then, it had this break above and it didn't. They're like, okay, we're going to go short. And then they got stopped out of their shorts. And, I can kind of empathize with them because live streaming has been a whole interesting animal in itself. You feel like you always got to be like narrating exactly what's happening, but it's okay to just say that I don't know what's happening right now and then not do anything. So then it broke aggressively lower, and I would have wanted to see, I remember I actually drew this breaker in real time, but I wanted to see it come up at least to this fair value gap, and it didn't, which is fine. As you can see, we broke aggressively lower, taking out these lows down here. And then we'll go to the 5 minute just because it tells the story a little more. So once you break below these lows, then it's just, at that point, it's just, okay, this is sell side, this is sell side, this is sell side, this is sell side. It just started tearing through all this sell side liquidity, coming back down. And again, remember the whole higher time frame narrative. It got into such a deep premium, and now it's just repricing aggressively to a discount. So came down, as you can see, this last sell side right here, which came right into that inefficiency, came down. You can see we started wicking into this fair value gap. The bodies were respecting its consequent encroachment, looks like, and then it had to come up for a deeper pullback, which makes sense. As you can see, we had this aggressive come down. Market doesn't move in a straight line, so we needed at least one up close candle on some of these other time frames. So we repriced up. Came down again, repriced up. I kind of wish we would have tapped into this order block. This fair value gap, but we didn't. I'm sure when you see something like this, you might just need to chalk it up to, again, the algorithm is cycling through so many time frames, even the sub 1 minute. So this could be a sub 1 minute fair value gap that we just can't see because we're not going sub 1 minute. But it was an inefficiency because remember, algorithm only moves for inefficiencies and liquidity. And when it retraces, it's like this. Again, it didn't retrace. Like it kind of took liquidity right here, but I think this was more of a retracement to fill in an inefficiency because we moved so quickly and it didn't get a chance to deliver as efficiently as it wanted to. Came up, broke down. In this 10 o'clock hour, silver bullets. Again, it would have been tough. Let's see. This is another one of those examples where I can pick something out in hindsight for you guys right now, but I think it would have been a reach. I don't think there's really an obvious silver bullet in this 10 o'clock hour. Maybe on the sub 1 minute. When we're moving this fast, I'm going to kind of talk about sub 1 minute a lot. I could kind of tell you like, oh, look at this fair value gap that delivered. But that's not the most obvious. I would not be trying to take a long in here after a move like this. I would not trying to go long. I'd be viewing this whole thing through the narrative of I'm going to wait for a pullback to go lower and continue the move. And ideally, that pullback would be, around 50%. I am surprised we didn't tap into this fair value gap, but that's okay. We didn't. Repriced lower. So, if you even did say there's somebody that's like, oh, outlining this 5 minute fair value gap, well, it didn't really deliver much. So delivered 33 handles. But again, that would have been a scalp. It wasn't actually, you would have been playing the direction of the day, which is usually my goal. That's what I try and aim for. Repriced lower. This right here, I think, was the only trade that I would have been like, yeah, like this was a very clear trade that I think anyone could have taken, because we came up, took buy side, this green line, it's this high, and that previous day high way back here. So we took the buy side, consolidated, repriced aggressively below. So this is a balanced price range now. Came down, consolidated, moved up, manipulated above this consolidation range, repriced lower. And then as you can see, with it repricing, I think it would not want to get back above this consolidation. So with this fair value gap right here being below the consolidation, I would like that a lot as an entry, because then your stop, whether it's, at the top of this candle that makes the fair value gap, or if it's the next candle, it's above these lows, which would be very enticing as a stop and just as a position and entry. And then you entered there and it would have been an immediate delivery. Then it got down to these lows, and then that was 11:30, and then we just kind of went into a range between 11:30 and 2. And then even the PM session, it wasn't that clear. Again, you've heard me sometimes speak on, if we sweep the lunch sell side, target the buy side, and vice versa. And this is one of those days. It doesn't have to happen. Understand that it doesn't really have to happen every day like that. And especially if we are in a consolidation, or like in a range, consolidation of the higher time frames, it might not want to do that. I don't think there was really anything obvious on NASDAQ in this 2 o'clock silver bullet window. Again, I think in the next 2 days, something that I'm going to do to filter out setups is we're going to really need a trending market on the 5-minute. It's something I've been thinking about lately. I think I've been getting kind of chopped up, trying to not waiting for market structure shifts on 5-minute candles. So I think I'm going to use that until we get out of this consolidation range as a method to kind of filter out and make sure that we're trending. Because if we're quote trending on the 5-minute, you're gonna get trades. So like our low hanging fruit objectives are 5 handles, 10 handles. So you're gonna get those trades. It's gonna move 5 handles / 10 handles, ES and Q respectively, easily if it is trending on the 5-minute, because usually 5-minute structure covers a lot more handles than that. So I hope that makes sense. So as you can see here, we are trending on the 5-minute. For example, this trade, we had 5-minute higher highs, higher lows, came up, manipulated above liquidity, broke down, came down below sell side, retraced up, and then broke lower. So on the 5-minute, we were trending. So again, I think that is something I'm gonna look for and hold myself to a lot stricter until we leave this consolidation on the higher time frame. And again, that would have consolidated out most trades and left this one open. But again, so you can see on the 5-minute for that 2 o'clock hour, we didn't really get anything obvious. We broke lower here and then came up and entered this fair value gap on the 5-minute, but there wasn't any clear fair value gap on the 1-minute, which is why I don't think there was really a trade in here. Again, this is one of those things when, if you're doing your back testing, if you are trading and then you go back and back test certain days, you got to look like, where did I see my model anywhere in this? Not really. again, there's no clear fair value gap in here where it's like, yeah, if you took that, most people would have identified that as like a silver bullet. I think in hindsight, picking a fair value gap out of here that delivered would be a little bit of cherry picking. But as you can see, we gravitated towards the new week opening gap, didn't quite touch it, and then kind of moved away from it. Go over to ES. Go to the higher time frame first. Again, remember, so ES is currently on a down close right now. So we'll see if it ends up closing down on the week. I would have preferred it. I still want it to come down deeper into these discount levels. But very similar thing happened on ES. As you can see, we've kind of been in this range on the daily, and then we had this spike up. And again, this is a good indicator that it is going up to grab liquidity, because the candle wick is so aggressive and the body didn't want to close above these bodies. So what I'm actually kind of hoping for is it will line up. Let's see what the high of this candle is. The high of this is 45.97. The high of this is 45.97.5. So it missed that by 0.5. On the weekly chart, I think, that's dead accurate, but they are equal highs. So what I'd be excited to look for, and I won't get into it right now. We'll have to, let's finish out this week before we start talking about next week. But I'm wondering if it's going to come down, dip into these levels to then take out these equal lows. But, equal highs. But they're very even. And so the whole point of me kind of talking on the daily, so I don't ramble, is what you should have been looking at. Okay, I'll start getting a lot more concise. What you should have taken away from this daily candle today is the fact that we had such an aggressive wick above all this high, above these highs, but the body couldn't close above these bodies. So that makes me think that it was just clearing out liquidity over these days, getting people in thinking it's going long, and now on the daily, tomorrow is probably going to be a down close day. Go down to the 4 hour, you can see it. And this actually on the 4 hour looks like a very nice change in the state of delivery for like an order block. That daily candle doesn't look that good on the daily, but if you go to the 4 hour, very nice. If we got below this low, I'd probably want to see high, low, higher, high. Use this as a breaker. Going down to the hourly. Let me just go to the 15-minute and get into the more trading talk. Similar to NASDAQ, again, we have this green line right here is that high from last Wednesday. So we came up above that, a little into pre-market. Consolidated, same story as NASDAQ, aggressively ran up. I think if anybody used this, I think this would have been a very fair, a clear trade. So going back to the PD array matrix, if you see on it, in the discount, it's in both premium and discount. When they say old high, when he says old high or low, and on both old high or low. So this is, you can think of it in two ways. Like this is an old high in a discount, but a scenario where it might be an old low in a discount is, let me see. On this 15-minute chart, this is an old low that you would use in a discount to go higher. So you use the old low in the narrative of I'm in a discount and I want to use an old low to say we're tapping into a PD array to go higher and sell at a premium. But say we have this market move up and we want to go sell at a discount or buy at a discount, sell at a premium. When you would use the old high is in a scenario like this. So we broke above an old high. We are retracing back down. This is considered a discount for where the implied dealing range is. So it came down, kind of tapped into this old high. Fair value gap, delivered. Yeah, now that looking at that, I think that would have been a good trade right there. But you would have had to make sure, and again, this is, I think right now, really highlights one of my rules of always take the first 5 handles on ES, 10 on NQ, go for the low-hanging fruit objective. And it's because if you entered right here, 5 handles would have been right there. But if you were someone and you were like, okay, well, say you didn't have this rule and you wanted to go for 10 handles, you wouldn't have got that 10 handles. The max it delivered was 7.5. And this green line right here is that old, way old high that when we were on the daily, I said they're basically equal. They're so relative. But if you held out for 10 handles, say you wanted to get 10, you moved your stop to break even. Because again, once it got above, when you tap into this, so you make a high right here, make swing high, you make a retracement low into the inefficiency. Once you get above this high, I would move my stop to break even. But one of my rules is take the first 5 handles. So we would have been out at 5 handles and it wouldn't have reversed. But see how quickly this reversed. That's why you really need to make sure that once you, and this is like trade management, once you break above this high, you're, really at either break even, or if you want to accept the loss, you can. But just remember, we're in such a premium here on all time frames. So this reversal, like I bet ICT himself saw this coming. Like he was probably selling all in this price range if he was trading it. But yeah, so that's why this is a great example of why I say take the first 5 handles. And it's funny because that's kind of biting me in the butt. I feel like ever since I started this YouTube channel, because normally I would trade with more contracts. So what would happen is when I do have winning trades, I would take 5 handles and then have a runner. But I've been trying in this YouTube channel to kind of make a point that's backfiring on me, because if you'll see it in when I do the monthly recap, those first 5 days in November when we went 5 for 5 that first week, they were all just 250, 250, 250, 5 handle hits. And then my losses as of late were a lot bigger than that. Anyway, not to get sidetracked. So we had this aggressive run back down, pricing below these lows. Similar to NASDAQ, accumulation. This was that same 1 minute fair value gap that was on NASDAQ that also ES couldn't reach to. Taking out sell side on the 5 minute. You can see us consolidate, reprice higher, manipulate above, get people thinking we're going back up, breaks lower. ES, it's interesting. The ES, the price action on ES delivered a lot nicer today, I would say, because I also think in hindsight that somebody might have played this fair value gap to the downside. Why that? Because right here, this is technically a swing low. So it came up. Market structure shifted below a swing low. This was just a manipulation leg above this consolidation. Entered on this fair value gap, put your stop up there. Could have delivered. That wasn't there on NASDAQ, but ES seems like it delivered a little nicer. Came down. Right here is that same fair value gap I called out on NASDAQ. That also delivered. And then similar story for ES. We consolidated between 11:30 and 2. Just a little bit of retracement. And then we had a delivery lower. Let's see. I think this would have been, if we were trading it live, we could have considered that. So that's not the lunch high, that's the lunch high, but it is a sweep of, I think this is a decently significant high. It's a 5-minute high. It's also the high that kind of made this shifted structure right here. But you can see we wicked above it, then trailed off, and then aggressively got lower. So let's see. Maybe somebody would have entered that. I don't know if I would have entered that. I would have probably waited for this, for us to sweep liquidity and then shift structure here. And then I don't think there was much of an entry after that. Came down. Maybe somebody could have entered hindsight on this. In hindsight, though, it could be very cherry picked. I think more realistically was somebody probably entered on that, and then you could still have your stop up here. That would have been a great stop placement, but you would have had to sit through a lot. You'd have to sit through 30 minutes of price in that. That would have been kind of stressful. We have this candle body. Looked like it closed like a tick maybe above the zone, but all the majority of the bodies are in this fair value gap. See it repriced lower. Just came back for old sell side. Came back for the previous day. So again, ICT talks about this in his One Setup for Life video where he talks about liquidity. The previous day's PM session low is usually a pretty significant level. So we priced below the PM session. Right down here. And we came back up. Interesting day. I think it wasn't the easiest to read, but I think it was, oh God, I'm sorry, I forgot to take the PD array matrix off. I have to get used to that. Wasn't the easiest day to read, but it was a readable day. And now that on the daily we repriced over all these highs from this consolidation, I'm hoping that we can start to see a little bit of market move. I'm thinking, I feel like they kind of held it because Powell was speaking. So I'm guessing Friday we'll see delivery to where the market really wants to go. He speaks at 2 p.m. on Friday. But again, yeah, just to reiterate, I'm still probably going to keep the range looking like that. Careful until we leave this range. It's going to be hard trading. And yeah.